Hello everyone, please join me as we explore the captivating research of two banking worlds colliding and discover the transformative power of digital disruption in the French banking industry. And this is the outline for the presentation, starting with an introduction and problem statement and ending with limitations and recommendations for future studies. Digitalization has made an impact in almost all industries, and banking is one of them. If we take a look at the data shown, almost all of the digital banks in France have grown in terms of their customer size from the year 2015 until 2021. In terms of the digital banking service penetration rate, the figures have steadily increased from 2006 to 2021, from around 18% to around 71% based on the literature that also studies the issue. This digitalization made the industry more customer-centric and competitive. The digital model of banks is also somewhat more efficient in terms of their business model, since they don't need a lot of branches, and this also reduces the number of employees needed. Nevertheless, the risk and legal requirements still be one of the barriers to entry for digital banks, which impact their sustainability. So, the core question of this research is, what is the impact of digital banking growth on the financial performance of conventional banks in France? Then, the null hypothesis for this research: there is no relationship between the growth of the digital banking sector to the financial performance of conventional banks in France, while the alternative hypothesis: there is a relationship between the growth of digital banking sector to the financial performance of conventional banks in France. Based on previous literature, the relationship between digital banking growth and conventional bank financial performance will continuously change, while another literature stated that adaptability is the key for banks to survive in this era of digitalization. The method utilized in this research is quantitative, using regression, where the strength of the relationship is described as strong if it is above 0.7 and weak if it is below 0.4, where it is moderate if it is between those two. Moving on to the variable for the main regression, the independent variable is the digital bank penetration rate in France and year. This is relevant since the digital banking penetration rate can be a measurement of digital banking growth, as it indicates the percentage of adoption and usage of digital banking service within a specific area, while the dependent variable is the weighted composite financial performance of conventional banks in France. This dependent variable is composed based on three key financial indicators, which are return on assets, return on equity, and capital adequacy ratio, in which their weightings are derived based on their influence on the whole financial performance of the banks and also previous literature review. The data gathered for this research is listed above, where the penetration rate is sourced from Statista, ROA and ROE from the Global Economy and FRED, and CAR is from SIG. As this is secondary research, a check on the reliability of the source is done, where the data are also gathered from different resources to evade a potential bias. The first is from Statista, where the platform has cited more than 100,000 media articles in 2020. Then the global economy, where the data comes from central banks, government agencies, and national statistical agencies. Third is FRED, which has provided economic data since 1991, and SIG, where they have provided data for economics and investment since 1992. The result for the main regression shows an R-square of 0.46, meaning the level of relationship is moderate between the two. So 46% of the variation in the dependent variable, which is weighted composite financial performance, is explained by the independent variable, which is digital banking service penetration rate and year. Then the p-value is 0.018, which is lower than 0.05, meaning that the penetration rate and year is a significant predictor. So Based on the previous site, since the p-value is lower than 0.05, the null hypothesis is rejected, and the alternative hypothesis of the existence of a relationship between the variable is accepted. In conclusion, the main regression using the weighted composite financial performance and year as the independent variable, the relationship between digital banking penetration rate and conventional banking composite financial performance is moderately negative when the year is not included as the independent variable. The relationship is weakly positive. To enhance the depth of this research, a detailed regression is also done on each key financial indicator, where the relationship is weakly positive for ROI and ROE and strongly positive for CAR. Based on the research, there are several recommendations for banks to cope with the digitalization. First is to partner with or acquire digital banks, because most of the time these digital banks are troubled by regulatory compliance and capital requirements, which older conventional banks might be able to help. The second one is to adapt and digitalize their service, and the last is to specialize in niche markets where the market is still underserved by the digital banks. There are several limitations in this study. First is the time frame, which is based on a 16 years time frame. Second is the scope, which is limited to the French country. And last is variables, which in this study, 3 key indicators of financial performance are used. So a recommendation for further study is accumulated, which is exploring the issue on a longer time horizon, trying to experiment with another measurement variable, and trying to explore the issue based on the qualitative perspective, digging into how the key stakeholder sees this issue. Thank you for your attention and stay adaptive.